Listen, my strategy is boring, like really boring. But despite that, it made me over $500,000 in month of October. And again, that's just my personal results. It's not typical. It's not something that after watching a YouTube video, you're gonna start making that money as well. I consider this boring because it doesn't rely on excitement, hype, or forcing trades. After 8+ years of trading, blowing accounts, rebuilding, testing just about everything that you can imagine, I realized something super simple. Boring plus repeatable beats exciting every single time. So in this video, I'm going to walk you through the exact strategy that I use and then go through a 1-month backtest so you can see how it performs. Quick disclaimer, this is for educational purposes only, not financial advice. Trading involves risk and results aren't guaranteed. Let's get into it. Now here's the truth, trading is not complicated. People make it complicated because they want excitement, but excitement is what destroys accounts. If you can master one repeatable framework, you do not need 20 setups. You need one setup that you can execute the same way every single day. And the reasons why my strategy looks boring is because it's rule-based. It tells me when I'm allowed to trade, when I'm not allowed to trade, when to size up, when to size down, when to hold, when to take partials off, when to cut it and be done, because that's how you stop gambling. Let me give you a rule that completely changed my trading. In my experience, you do not need more than 90 minutes to day trade. The first 90 minutes of the market gives you the cleanest moves, and after that it gets choppy, it gets slow, and that's when most traders give back their profits. So my job isn't to trade all day. My job is to show up, trade clean, execute A+ setups, and get out. Less screen time, less stress, more consistency. My entire strategy can be explained in one paragraph. I only trade outside of the no trading zone. I trade in the direction of the trend using time frames and 200 simple moving average. I enter using opening range breakouts with clean structure. I size in using bell curve and let my runners run on a trendy days. And that's it. And if you can't explain your strategy this simply, it's too complicated. And if you can't execute the same way every single morning, then it's not a real strategy, is it? Every single morning, the first thing that I do is I mark my levels. Before I even think about entries, before opening range breakouts, before no trading zones, before anything, I mark my levels. And let me be super clear with y'all, because most people mess this up. People use levels to get into a trade. They see a level breaking, they're like, oh, let's jump into a trade. I use levels to get out of a trade. That one mindset shift alone will change everything how you trade. Here's exactly how I do it. First thing, I go into my trading view and go on an hourly chart. I want to make sure I have extended trading hours on. So go to the settings, go to symbol, and make sure this session says extended trading hours, because you want to know the pre-market and after-market data as well. And then what I do is I simply switch the chart to the line chart right here. Now listen very carefully. I'm not trying to be perfect. I'm not drawing fancy zones. I'm not overthinking it. I'm literally drawing levels at every single bend that you see on this line. If the prices are here right now, I'll draw 2 or 3 levels above the price and 2 or 3 levels below the price. Anywhere where we saw the price is clearly rejecting. For example, we have a little bend here, then comes this little bend, then comes this little thing, 3 levels towards the downside. Let's see, we can draw levels on the upside. First one is right here, second is right here, and the third one is right here. So what I did was I drew a couple levels towards the upside, couple levels towards the downside. Anywhere that the price clearly turned, paused, or bent, I simply marked it. And that's it. Now once I've done that, I'll switch back to the candlestick chart, and then I will try to adjust these levels a very tiny bit. So for example, this level can move up and touching this wick, or this level can literally move down, make sure touching all these wicks right here. This level looks perfect. And once we have these levels all done, that's when I'll switch to a 5-minute candlestick chart. And this is where things get interesting. You'll start seeing prices getting rejected around these levels. Like prices will slow down, reverse from them, or accelerate as soon as we break below it, or simply the momentum will pick up as soon as we break these levels. So these levels simply become my profit taking areas. When price hits a level, I'm scaling out of a position, I'm trimming, I'm letting my runners react. I'm not randomly guessing exits. The market already told you where it cares about the price. Trading is not complicated. We just make it complicated by ignoring simple structures. Now we get into real frameworks. Step 1 is simple. Before I take any trade, I mark my no trading zones on the day. No trading zones is an NTZ box. NTZ is built using pre-market high, pre-market low, yesterday's high, and yesterday's low. Now listen to me very carefully. Inside the NTZ is where beginners get destroyed. This is where you get false breakouts, you get trap wicks, chops, algorithm games, and overtrading. So if the price is stuck inside NTZ, I'm not trying to be a hero or trade very small position sizes, only if there's a very specific clean setup. Most of the time, no trades. Because I don't get paid for activity or trading, I get paid for precision. Sitting on your hands is a position, cash is a position. Next, I'll confirm the direction. Most traders lose because they're looking at the wrong time frame at the wrong time. My structure is super simple. First 30 minutes of the day after the market open, I'm on a 2-minute chart. From 10 o'clock to 11 o'clock, I'm on a 5-minute chart. And after 11 o'clock, that's when I switch to 10-minute chart. And then I use my truth filter, 200 simple moving average. If the price is above the 200 simple moving average, I'm thinking calls. Below the 200 simple moving average, I'm thinking puts. If the prices are chopping around it, I'm chilling. Now I know where I can trade, which direction I want, which time frame to trust. We still haven't even entered into a trade. We're just building the edge. Now comes the entry. I use opening range breakout, but here's the key. What's opening range breakout? Opening range breakout is the range of first 15 minutes into the market open. So what you need to do is mark your first 15-minute candles high and the candles low, and these become extra solid levels for whole day. Now I don't chase breakouts. I wait for the retest, break, pullback, structure, entry. That retest outside the NTZ in the trend direction, that's where A+ trades come from. If there's no clean retest, I don't simply take the trade. No retest simply means no trade, because this is where patience turn into money. And now comes people say, hey man, my profits are always smaller than my losses. Now even with a good strategy, bad sizing will ruin your trading. And that's why I use bell curve sizing. First trade of the day is always going to be with a small position size. If the market is clean, I'm in the rhythm, I'll size up. If I'm red or unsure, I stay small or I'll stop trading altogether. I never go max size on the first trade. When the market gives a clean trend day, I don't panic, take profits. I let runners run. And that's how average days turn into big days. Now let me make this real for you. There are days where I'm up like $100,000 on the day. Again, that's not typical. Those days only happen when the market conditions are literally super clean. And people think, oh, he just got lucky. No bro, this day wasn't special because of one magic entry. That day was special because the market was trending clean. I stayed out of NTZ, I waited for the ORB plus retest, I took A+ setups only, I sized correctly using bell curve, and I let my runners run instead of panic exiting. Same thing with a big month, the strategy doesn't change. The market gives you more opportunity. When it does, you do not get scared, you execute. Now, if you want to get good at trading, you have to backtest. Literally, all you have to do is go on your trading view and go to this replay feature right at the top. Just literally go and select this feature right here, selecting random bar. It will literally take you randomly somewhere on the charts. For example, this is 2017, or randomly sometimes it'll take you 20 years back. That's the only thing that I do not like about this, to be honest. Like now it took you to 2013, or it might take you even, sometimes it takes you 1998 and stuff, 2011. But all in all, I'm saying is it will randomly take you to a random day in the stock market. I mean, right here, it took you to 2006. But doesn't matter any day. What you need to do is you need to mark the NTZ, mark your levels. To mark the levels, you got to go on a 60-minute chart. You mark your levels, and then you go on a smaller time frame, and then you're going to mark your NTZ before the market even opens. Now, in order to mark the NTZ, what do you need to do? Mark your pre-market low, pre-market high. Okay, now we're gonna go literally swipe left a little bit. All right, now what we need to do is, okay, this is the lowest point, so this is good. This was the highest point, but now from yesterday we have this as the highest point. This becomes your no trading zone for the day. That means if today the prices stayed within this range, we are not going to take a trade. That means the only time we can actually enter into the trade is once we fully completely break out of this range. I mean, check this out. The market stayed choppy pretty much all day. You might be like, oh my god, I could have taken the trade. No, you would not, bro. There's no money to be made here. Why? Because it's stuck inside the range. I mean, just have a look. This is where the stress comes in. People go, oh my god, I don't know. I mean, the only trade that we broke below the NTZ. This is the range of first 15 minutes, this red candle. What happened? We broke below, came back, retested, made a huge move towards the downside, and then evict through. That's why you need to take profits as well. And then you're only taking apes trades. And then you need to journal that, because you can't really improve what you do not measure. You know what? Let's backtest a little bit, because I want to backtest now. Let's go to the charts, and literally we will not go that far back because there's absolutely no reason for us to go that far back. This is another way that I like to do this. All right, go on an hourly chart. Make sure you're on extended trading hours. Make this super small. Like literally make this so small to a stage where you can't see what's happening on the chart. Like there's absolutely zero bias that you have. You do not know what's happening on the chart that given day. You understand what I'm saying? Then what you need to do is go to this replay feature and then select bar, because you don't want to go back that far back because the market conditions were different, things were different, and just scroll that far back and you have no idea what's happening here. You understand what I'm saying? When you have no idea what's happening on the chart, just go pick a random day. We'll go select this, let's say Tuesday. Sounds about right. Okay, let's go Tuesday, October 7th. Let's do some backtest. We'll do 3 days of backtest and see what happens. All right, so what we're going to do is we are going to go on a smaller time frame, or actually we'll stay on an hourly chart and we will draw some levels first. All right, let's see what's happening here. Okay, now let's draw some levels that we need to draw. Now, in order to draw levels, first thing that you do is you go on a line chart, and then you need to select simply literally where the prices are right now. You need to mark the bends that you see next to each other. All right, we see these three. What else do we see? We probably will mark here as well. This little bend right here. All right, sounds about right. If you want to go further, you know, while we're here, why not? I believe this was all-time highs. That means the prices were never ever traded around here before. Yes, this is the all-time highs. With the all-time highs, this is where the tricky part comes. You can't really mark any levels. You're gonna mark just every $1 move, or you're gonna mark pre-market highs or pre-market lows. So what we will do is we'll jump on a 5-minute chart now and just have a look and go to the candlestick chart and just have a look where's the pre-market high. The market opens at 9:30, so we'll stop at 9:25 and have a look what's happening. All right, so right now this is 9:20. We'll go one more candle. So now we're at 9:25. This is where we're at. So what we're gonna do is we're gonna mark our pre-market high and pre-market low as well. So you can literally label them if you want to. This is pre-market low. This is pre-market high. Now, if I do end up taking a trade within it, what's NTZ here though? NTZ would be pre-market high to pre-market low. Okay, and then we're gonna swipe left a little bit from yesterday market open and then see, okay, highs is good. We just need to mark the lows from yesterday. This becomes NTZ that we have. That means if the prices stay within this, we're not gonna take a trade unless or until something looks so freaking clean. We can do a small position size and see how we go. You understand what I'm saying? Now what I like to do is I will literally go on a smaller time frame. So I'll go on a 2-minute chart because that's what I watch for first 30 minutes of the market open anyway. Now we know that this is literally the NTZ. What we're gonna do is we're gonna just hide this for now. We'll get back to it if we need to. All right, let's see what's happening here. Right at the market open, market decided to try push towards the upside, and now we are sitting back. Why? Because first 15 minutes is what it takes for the ORB to form. We don't want to take a trade essentially before first 15 minutes, because what happens when you take a trade within first or before first 15 minutes? You are literally firing the whole algorithms, you're firing the whole market. You wait for first 15 minutes. Sit back, don't worry. There's absolutely nothing that we're losing. You understand what I'm saying? There's an indicator that I use that marks the first 15-minute highs and lows. What you need to do is go and search ORB, and this guy by ZZZ Crypto 123, just click on his name. Once you click on his name, make sure the settings are this. ORB says 15, 9:30 to 9:45, and then you change the style to this, and visibility is exactly this, what I'm showing you on the chart. And then press OK. It will literally mark a green line at the top and red line at the bottom. So now what we're gonna do is we're gonna wait for first 15 minutes, wait for the ORB to form. You see this red line forming and this green line forming? So far it looks like this is but 15 minutes haven't been done yet. So we're still waiting, and it looks like 15 minutes is done. Yeah, first 15 minutes is done. So this is the ORB zone that we have, this at the top and this at the bottom. Now what we need to do, we need to wait for a break and a retest if we are going to take a trade within first 30 minutes. You understand what I'm saying? So let's see, can it break below? Okay, it broke below, but what do we need for the entry? It's still stuck inside the NTZ. You understand what I'm saying? Still stuck within the NTZ. That means if we do end up taking a trade, it's gonna be small position size. But you can also pay attention to the news. Was there any news happening on that given day? So for example, right now we're on October 7th. You can literally go here and check if there was any news that given day, so you can be a little bit extra careful. So October 7th, we had a news come in at 10 o'clock, which is Fed speakers were talking, and then we had pretty much whole day Fed speakers were talking. Okay, so now we know that those Fed speakers are speaking at 10 o'clock. That means the market can influence what they say. You understand what I'm saying? Fed speakers are people like they talk about inflation, interest rates and stuff. Anyway, now what we need to see, when we need to see a retest, you do not jump at the retest, you jump a candle after the retest. Especially now, for example, let's see the retest candle, what happened? It went back straight away. Okay, this can still be considered as a retest. If it breaks the low of the day, we can still take a trade, but for now let's see what happens. Oh, it went back up. That's why we do not take a trade on the retest candle. We take a trade on the next candle of the retest. You understand what I'm saying? So now we are still pretty much at the same spot. We're like, yeah, no problem. We sit back. 10 o'clock is exactly when this is like 9:58. We're about to jump on a 5-minute chart. Let's have a look on what's happening on a 5-minute chart. We still haven't broken the ORB range on a 5-minute chart. You understand what I'm saying? I hope this is making sense to y'all. Now let's see what happens the next. Okay, let's see. We always do one candle at a time. You always want to take it easy and go one candle at a time. So what happened right here? We had a big move toward the downside. It clearly tells us that ORB is broken. Now what we need to do is we need to wait for ORB to retest. That becomes the entry. Do you understand what I'm saying? So we need to see ORB to retest. Come on, let's go. ORB retest. Give me a retest, darling. Okay, hasn't retested the red line yet, so we're still sitting. What did I say? We do not enter on the retest candle. We enter on the next candle of the retest. Okay, so this candle closed. Okay, now we can enter the next candle. As soon as it opens, we can enter into the trade. And now let's say we're in the position, stop losses on the other side of the ORB, and let's see how we go. Again, this is a random day that I selected. I might be wrong. Let's see what happens. Made a big move, boom, boom. If you're sitting in puts, now for a lot of people who do not know how to trade, you can literally make money when the market is going down as well by playing puts. We trade options. You can make money if you structure it the right way, but most people, you know what, they don't know how to trade. They jump in early, they jump out too late, and they end up losing money. But I mean, just check this out, bro. Made such a huge move towards the downside, and now we broke below the 200 simple moving average. Let's see if we can come back and retest this 200 simple moving average for another trade. What happened? The next candle went back, retest. We do not enter at the retest candle. We wait for the next candle to open. So what happened? The next candle opened, we decided to jump into a trade again. Will it go down even further? We are taking profits as the yellow lines are hitting. So if you jumped in 10 contracts, let's say here, you're taking 5 off. The next level, you'll take a little bit more off, and made a massive move towards the downside already. And let's see if it can, this is a 400 simple moving average again. Let's see if this 400 simple moving average can go back and retest as well. It went back and retested right there. Okay, you do not enter here, you enter on the next candle. So we decided to buy some more puts. Now let's see what happens. Big move, big move, big move, big move. A lot of retest. Bam! That's how you do it. Look at that trade, man. This is a random day that I picked out of the blue, and this is what's up. I mean, just have a look. This is an insane move towards the downside. Now again, was there any risk involved? Yes, because we were trading in no trading zone, but after we broke out of the no trading zone, which is right here, it really picked up. And let's see if we can come back and retest this no trading zone. It went back, retested this no trading zone, and it made a further move down to it. Boom, it made a further move towards the downside. Again, as I said, this framework isn't exciting. You're not taking 20 trades a day. You're not glued to your screens all the time. But over time, it compounds because your losses stay small. Your winners actually do get some room to breathe. And that's how consistency is actually built. All right, let's do another day. This is just one day after that thing. All right, we're going to remove all the drawings, and then we're going to go on a line chart, and then we're going to mark the levels. Few levels towards the upside and few levels towards the downside. This is a band, this is a band, and then we have this is a band. Toward the downside, we have 1, 2, 3, 4. That should be more than enough. Then we'll go on an hourly chart again and a candlestick chart, and then just try to see if we can adjust this a little bit. But for that, I like to go on a 5-minute chart. The reason being, I want to adjust my pre-market more than anything. So pre-market is this, pre-market high is this. That means these levels are sitting too close to the pre-market, so I'll remove them. So I have my pre-market levels, I have my NTZ levels now ready to go. So that means if the prices stayed within this range, it's going to be NTZ anyway at first place. So now we have the levels done. So now what we need to do is going to go on a 2-minute chart, wait for the market to open, then see what's happening on the day. So now 9:30 is when the market opens, and we will literally stop at 9:30 and have a look what's happening. All right, the pre-market high looks solid for now. Market opens literally right here, 9:30. Boom. What happened right at the market open? Made a little wick at the top, little wick at the bottom. There's no trade. First 15 minutes, we're gonna sit back anyway. So let's quickly fast forward first 15 minutes. I will sometimes take a trade within first 15 minutes, but most likely, I like to personally wait for first 15 minutes. There are days when I take the trade within first 15 minutes, depending on how the market is holding, depending on how the structures are holding. But overall, I like to wait for first 15 minutes because it literally takes out so much bad trades out of the picture, because it takes quite a long time for the market to calm down for the day. So now we have 945. I think 945 is set. We have a level at the bottom, we have a level at the top, everything ready to go. Now what we need to do is we gotta wait for something to close on the other side of the ORB. Let's see what side does it go. Does it close above? No, it hasn't closed above yet. All right, let's give it another try. Oh, hasn't closed above the ORB. Look at this. We saved ourselves from the trade and still sitting within the ORB. It's almost 10 o'clock, looks like. We're going to switch the time frame at 10 o'clock right now. Let's see. Hasn't closed above yet. So we're still sitting back and still chilling. So now let's jump to the 5-minute chart and see what's happening. On a 5-minute chart, the 10 o'clock candle made a massive move towards the upside. There was no candle that broke above the ORB before. Now, what does that mean? That means if it comes back and retests this ORB or this level, the pre-market high, we do take a trade, no problem. But if it doesn't retest, then we'll just literally wait for these levels to break above and retest. Exactly same framework, but just different way of approaching it. You understand what I'm saying? So now this candle closed above? Not yet, not yet. Check this out. Just check this out, bro. What I'm saying, it closed above. You see this? It closed above, tapped this. It closed above this for sure. It tapped this and made a wick. Now we're like, okay, let's see how it goes. It made a huge move towards the upside. And then this is the time where you go, okay, let me check if there's any news happening on this day. So this is, I think, October 8th. So let's see if there's any news on October 8th, 9:30. Okay, 10:30 is when the news is coming. All right, so how far is 10:30? 10:30 is not actually quite far. No problem. Let's see if we can come back. Now, we can also draw Fibonacci levels. Fibonacci levels essentially means these are like, algorithmic levels. So you can literally go on the left hand side, select your Fibonacci, and when the day has set up something like this, you need to wait for some sort of pullback first. Okay, let's see. Okay, we got a pullback. Now what we can do is you can draw a little Fibonacci and see where the pullback can happen. On ultra strong days, I like the pullback at least to 0.236. Those are the pullbacks. Now it hasn't touched 0.236 yet, so hey, sit back, no problem. You don't have to rush into a trade. It hasn't retested, or we want to essentially write this down if you can. So essentially, you never want to take a trade by independence. What does that mean? One level, one thing by independently, you taking a trade, you asking for trouble. You always want to look for a confluence. Confluence simply means when there's more than one reason for you to take a trade. Now here, break and a retest of a level will be just one reason. Second reason we like to probably see is maybe if your Fibonacci level was sitting at the same point, or maybe if it comes back and retests the 0.382, that'll be nice. Or if it come back and retest this 8 exponential moving average, this is my settings of 8 EMA, by the way, if you want my settings, if it comes back there. So essentially we just want couple reasons for the trade to work in our favor. You understand what I'm saying? So now we are not in a trade, we're sitting back, see if there's any, oh boom, it bounced off this 8 exponential moving average, it bounced off this 0.236 level, it bounced off this hourly level. You do not take a trade on the retest candle, you take a trade on the next candle. That means we will take a trade and put a stop loss literally on the other side of this Fibonacci level at this stage. Profit target would go probably the next hourly level that we have. Now think about this. You can literally, this is what it look like. If the next candle opens, we taking this trade here, the stop loss can go on the other side of the Fibonacci level, and the profit target, which is the next level that we're watching, boom. So all of a sudden this becomes a trade where you're risking like 30-40 cents to potentially make this. It looks decent, it looks pretty good. You understand what I'm saying? So now we're gonna take a trade, and now let's see how it goes. It decided going in our favor, no problem, everything looks good. We haven't taken any profits, and that's when we knew 10:30 was some news coming out, and now we're still sitting it super close to the stop loss, but stop loss hasn't triggered yet, so we're still chilling, we're still waiting, no problem, no stress. 11 o'clock is when we jump on a 10-minute chart. Patience pays the patient hand that waits patiently to be paid. If it goes in our favor, we will get paid. Again, you can do another entry here as well. For example, what it looked like, it came back and retested the zone again. ORB, critical level, everything looks extra solid. It literally is bouncing off the new level that we drew as a Fibonacci level. Let's see if it makes a move towards the upside, and boom, 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 boom. What happened? And did it hit our profit target? Boom. Hit your profit target for the day, and absolutely beautiful. So all of a sudden, everything becomes about waiting for the best entries, waiting for the best trades, taking the best possible setups. And that's how you can improve your win rate and improving your chances of getting successful in the stock market. Now, if you want to go deeper, I trade this live with my students every single day in the real time. Now, everyone's results are different. This is about process and execution, not promises, how much money you're gonna make and stuff. Like every single morning, you literally see what trades I'm taking, what trades I'm avoiding, when I size up, where do I size up, where I size down, and how I manage my runners. And the biggest part, it's not literally about strategy, it's about psychology, and that's why we do Sunday calls, specifically to fix the mindset, the discipline, the confidence, the stop loss acceptance, revenge trading, over trading, and emotional control. So if you want to be a part of this elite trading room and actually build consistency the right way, check the first link in the description box below to apply for the mentorships. If it's open, apply. If it's closed, try again. I keep it limited. I rather work with few serious traders than 1,000 confused ones.